Welcome back to Compound Thesis. Our guest today is John Pennington. He's the head of business development at JST Capital. Welcome to the show, John.
Thanks, Jim. Great to see you, man.
Yeah, I look forward to the show. So today we're going to be chatting about a few things. So we're going to start with the current state of liquidity in crypto across centralized and decentralized exchanges, how JST helps make markets across different projects, and how different trading strategies have evolved. But before we dive into that, wanted to get a little bit on your background. So, you've been in crypto for a few years, a few different places, but would love to understand, how did you get into this space in the first place?
Definitely. So, stepping back in kind of the pre-crypto era for me, I started my career at Macquarie as a prop trader focused on emerging markets, equities, and currencies. And we were dealing with kind of complex currency trades across a number of different regions, mainly focused on Asia. And one thing that really stuck out to me was how difficult it always was to settle trades in different regions, all the different nuances and you know to use a crypto word, kind of lack of interoperability in the traditional FX market. I'd been introduced to Bitcoin through some friends. It's something I had been curious about, but ended up going down the rabbit hole. First off, just seeing it kind of more as a personal interest. Got more broadly interested in crypto around some of the early Ethereum days. And then, 2017, I had actually gone back to business school, was looking at different opportunities. And that was really when crypto was going a bit more, at least professionally, developing more in a mainstream perspective. Had the opportunity to really do what I saw as combining career and hobby, which was pretty awesome for me. Ended up working at Circle, which folks might not be aware of, but in those days was mainly an OTC trading desk, kind of one of the early crypto OTC desks, servicing institutional clients. And that was an incredible experience for me, getting to leverage a lot of what I had learned on the traditional side in what was a really nascent institutional market in the crypto world. Circle obviously has made some amazing progress, has developed into totally different version of itself, and huge fans of what the team has done over there. Personally, after that, I spent some time in venture. More recently was at BlockFi. About a year ago, joined JST, and happy to chat more about what we do at JST, but it's been an awesome progression so far.
Always love when people, find their way in a career path that blends the two worlds of their passion and their profession. So great to see that you've landed a role that kind of brings those two worlds together. So I guess, would love to learn a little bit more. For the folks that aren't familiar with JST, can you give us just a high level overview of the firm?
Yeah, so JST, we're a crypto native financial services firm, and we do a few different things. So I lead business development, our external facing business lines. On behalf of clients, we do market making on behalf of both issuers as well as exchanges, working in both centralized as well as decentralized venues. We also do broadly asset management, both on behalf of our capital as well as external capital in the form of treasury management for projects, other crypto native funds, as well as high net worth individuals. We also offer execution services. And then finally, we do some strategic venture, trying to partner with great founders where we feel like we can bring our expertise to the table and help great founders build.
Yeah, so you're right in the nexus of all of the different aspects of the crypto ecosystem. Can you share a little bit about the founders? Because my understanding is JST is the acronyms of the three founders. Is that right?
Yeah. So our two of our founding partners, Scott Freeman, Todd Maracus, started the firm back in 2018, and the ethos of the firm, I think, is a big testament to kind of their backgrounds, and that both of which had come from 25 plus year Wall Street careers, but also have been deeply involved in the crypto ecosystem for quite a while now. Scott, for instance, was one of the early crypto market makers professionally back as far back as 2014. And I think I see that as one of the big value adds of our firm, in that we both have kind of the adult in the room approach to both risk management, client service that is kind of honed in that more traditional sense, but also understand the nuances of dealing in this crypto native world. And some of the differences that I haven't always seen in other firms, kind of marrying those two mindsets. And when I had the opportunity to join here, that was something that was super exciting for me, and it is something that I know is really appreciated by our counterparties and clients.
Awesome. So what type of projects do you guys typically work with on the market making side?
Yeah, so as mentioned, we work with an array of projects and clients, ranging from large foundations, early stage issuers who might be listing their token for the first time, as well as exchanges, both on the centralized and decentralized side of things.
Oh, awesome. Okay. So, if you look at the markets as it stands today, like what kind of, can you give us some insights from your perspective as a market maker? Like what does liquidity look like in crypto right now? Obviously volumes have come down quite a bit. So yeah, I would just love to get your perspective as somebody that's working in these markets on a day-to-day basis, both across centralized and decentralized exchanges.
Yeah, definitely. So, I mean, you hit the nail on the head that volumes have, decreased pretty substantially over the past 6, 9, 12 months. Volume is something that we've seen the past few crypto cycles kind of comes in waves, but we've also seen liquidity really pull back across the board. I think part of that is just general kind of risk off appetite from a lot of firms. I think another piece is that, it's unfortunate we have had some large players in the space that no longer exist. I think another component is that we're also seeing fragmented liquidity, and happy to kind of go further into that of different areas we're seeing liquidity fragment. But in terms of generally where we're seeing some of these shifts in liquidity, we're definitely seeing an interest and demand on the DeFi side of things. I think part of that is related to some factors around a lack of trust on the centralized side of exchanges. But I think the other component is some of the shifting preferences and what users want on the DeFi side of things. But all of that said, it's there's definitely been a liquidity pullback, and we as a firm are looking for opportunities of where we can support great venues and great projects.
Can I pull a little bit further on that thread of the liquidity fragmentation? Like what does that mean, and what are the kind of trends that you're seeing on that side?
Yeah, so I think one piece on the centralized side of things is that we are in a world where there's kind of the USD denominated exchanges and the Tether denominated exchanges that don't always speak one-to-one to each other. So I think that's on the centralized side of things. On the decentralized side of things, as we saw in kind of the rise of the multi-chain world in 2021, of different chains seeing a lot of activity, which is awesome. It's awesome seeing people building different ecosystems, trying to approach problem solving in slightly different ways. But as a result, on-chain liquidity started really fragmenting last year, and that trend has continued. Folks have been building different dexes on different chains, which is, again, something that is, in my opinion, really working towards solving a kind of a novel use case for crypto traders, and that providing venues for exchanging assets without relying on the central trust that may have been violated at points of time in the past few years. But as a result, if you're trading on one venue on one chain, yes, there are bridging solutions that are there, but it's not necessarily straightforward to have DEX on chain A be able to interact with DEX on chain B, et cetera, et cetera. And then even within those ecosystems, having different pools of liquidity.
So are you seeing then any specific chains or types of or areas get more adoption in any particular L2s or any L1s? Like, can you give us a little bit more on those specifics, like where you guys are seeing more or less activity that is interesting?
Yeah, so definitely been some interesting trends in that regard. A lot of folks talking about the optimistic roll-ups in the Ethereum world right now. A stat I saw a couple weeks back that was pretty publicized. Arbitrum, for instance, doing more daily transactions than Ethereum main chain was pretty interesting. A lot of talk about what comes next on the ZK side of things, but also people building on some of the legacy chains and different developments there. I definitely see a world where we continue to see this multi-chain universe. And again, some of the building that we're seeing on these L2s is really exciting. And especially on the DEX side of things, it's really interesting what's possible now with some of the scaling solutions out there.
Yeah, no, absolutely. And are you seeing, does JST kind of traffic as well in not just spot, but derivatives as well? Like, are there any, new innovations or products or kind of venues that are popping up on that side as well?
Yeah, it's interesting you bring that up. So we work both on spot as well as derivative side of things, namely market making with perpetual futures. It's something that I and we as a firm are super bullish on long term as a trend, in that perps are a pretty amazing product. I think that it's not any big surprise. Perps have really flourished on the CeFi side of things. An interesting data point that someone showed me a little while back is, I believe it's about 80% of spot volume is on centralized, so 20% on DEXs, whereas with perps, it's under 2% of activity is happening on DEXs. And to me, that's just shows the opportunity, even within DEX activity, for growth of perpetual trading on chain. And again, being able to enable traders to have that same CeFi experience with the added benefit of not needing to trust a central counterparty, which is a big reason why at least for myself, I originally even got interested in crypto. So again, we see as a firm and a huge opportunity for growth of perps on chain, and is something that we're working with a number of projects to help support liquidity in that universe.
So I would imagine, you've kind of basically talked about all centralized, decentralized, basically any L1, L2, JST can potentially traffic anywhere. How does that, how do you guys think about growing your team, or like the structure of the firm? Because I would imagine that there's a lot of engineering talent and, expertise that has to be built in order for you to be able to support your clients in these different areas.
Definitely. And, I think a great thing to point out that we as a firm are very much looking to support throughout the crypto ecosystem. And, while I'm on the biz dev side, we have a great technical team, across the globe, across both Asia, North America, as well as a handful of folks in Europe. And, we continue to look for great talent, continue to look to, find opportunities to enhance what we're able to do on behalf of clients. We've had really a pretty nice, we've built out a really nice expertise on the DEX market making side of things that I see as something that is true value add to the counterparties that we work with. And again, is something that just for the crypto ecosystem, I think is needed in terms of liquidity on the DEX side of things. And I'm excited that it's something that we're able to be a part of.
No, that's great. So I guess then, like you mentioned, JST has a prop trading arm. So, what has the trading desk seen in terms of activity in the past few months?
Yeah. So, I mean, not to harp on it again, but I think it goes back to pullback and risk we've seen in the market. I think the drying up in many aspects of liquidity. But interesting, I think another one that stood out is seems to be less appetite in the market for kind of trading big macro theses, whether it's kind of the risk on assets and crypto correlation that was so strong last spring that has broken down at times, but also even just inner crypto narratives. I think something that's, we've seen a number of these trends we've already spoken on, the market try to express views, whether it's roll-ups, whether it's different ways to approach things like NFTs, like Blur, for instance, is a big topic in the market. In general, though, I think it's been interesting to see things like even perpetual basis has, after going negative back in the fall, has gone back positive again. Again, it's been interesting just to see some of the dynamics that have been created by this low liquidity, low risk or risk off stance in the market. But at the end of the day, it's not too dissimilar than what we saw in 2019 into early 2020, where things just kind of muddled along sideways to, again, drying up of liquidity, drying up of risk until, someone said to me years ago, the bear market's not over until people are bored and kind of give up and no one's talking about things. And in my opinion, yeah, exactly. And, at the end of the day, have we seen true capitulation? Not sure. There's obviously different emerging stories at any point in time, but yeah, it's been interesting to see how some of these trends have played out.
Just curious, given all that you highlighted with, challenges around centralized exchanges, and I assume that, the risk management side of JST has become much more top of mind. So what is JST's approach to risk management in general when it comes to, different venues or different opportunities? Just more broadly, just curious how you guys think about that. And also, maybe kind of like weave that into, you mentioned about the macro side. Does that impact kind of how JST thinks about risk on or risk off in general as well?
Yeah, so risk management is and always has been very much top of mind as the ethos of our firm. I think that, you make an important distinction that there's different types of risk management, and that you have to be, as a trading firm, thinking about things like market risk, price risk, but then there's, I guess you'd call it operational or counterparty risk, which is what's obviously been so topical the last 6, 9, 12 months. And, I think that that's something that's been critically always part of our risk management process in terms of limiting assets on any one venue, trying to build redundancy so that even if we have limited assets on a venue, are we always able to execute the trading strategies and asset deployments? Have we built redundancy effectively between venues that we're not overly reliant on any one venue? I think another component of what we do that is pretty paramount are just regular fire drills of, if this happened, then we do this, so that we can try to mitigate any big surprises. And yes, it might always be a scramble of, as we know, anything can happen in crypto at any point in time. But when there's known unknowns, you got to be preparing for those. And that's something that, as a firm, even prior to the craziness of the last 6 months, was something that we've always been proactive about, and thankfully has allowed us to mitigate a lot of the situations that have been so public, unfortunately, over the better part of the last year.
Yeah, no, that's great. I mean, having that be top of mind certainly, comes from a TradFi background. That is, a priority in terms of the way that you run your business. So makes a ton of sense. Last question on the trading side. You guys trade 24/7, and I think the big narrative lately has been, that Asia, or that the next bull market is coming from the East. Not that you have a view on that specifically, but since you're looking at markets 24/7, do you see any different, trends in when America is awake versus Europe is awake versus Asia is awake, in terms of volumes or price activity? Any insights on that front?
Yeah, so it's interesting. That was such a trend that was talked about. I feel like that was like the big Twitter talking point in the bull market was, oh, US is going to sleep. What does that mean when Asia gets in? Or Asia is going to sleep. What does that mean when North America gets in, et cetera, et cetera? A lot of people, this is just kind of general observation. I saw a lot of different folks and firms discussing kind of analyses they had done. I don't think there was necessarily any clear lasting trends, because I think if anyone found clear trends in some of the data, it'd probably be arbed out at this point in time. Yeah. But That said, you do definitely see different venues having different volume profiles. And I think that part of that is, again, kind of the dollarization of some venues versus the stablecoin venues and kind of where that exists regionally. I think that, again, this is topical at the moment, but I think especially as we see regulation out of the US and potentially a few other countries, we might continue to see some of this fragmentation of activity driving different trends. But, you know, from my perspective, it's not the rumor of, oh, Asia's going to wake up and sell or vice versa. And if I had identified that, I probably wouldn't be talking about that and we'd just be trading it. But I would say it's more so just apparent in volume profiles, but even that shifts because the market will adapt to trends that a lot of people are spending a lot of time always trying to figure out.
Yeah, it's interesting. I mean, you brought it up twice, so I have to kind of talk about it, which is I saw a stat that volume trading on Binance is now heavily dominated in USDT pairs versus fiat. And that I think is probably something that will continue, especially given the recent news around some of the banks in crypto and just kind of the general atmosphere in the U.S. Around allowing dollars to participate in this ecosystem directly. So stablecoin pairs will likely dominate much more so going forward, where participants will have to be on chain to be able to interact with crypto assets versus having a very seamless on ramp, at least in the interim, while a lot of this kind of recent shakeout continues to play out. So last thing is JST, I'm assuming, employs some sort of leverage and or borrow to express your strategies. So we just went through a huge crypto credit cycle that ended middle of last year and continued to decline. Liquidity and leverage is really depressed at this stage. So how has that affected like your ability to run your business model? And how, are you guys pivoting or changing ways? Are you finding new ways to source credit in order to deploy your strategies?
Yeah, so I guess just first, holistically, from the market perspective, as you hit on, the credit sourcing side of things has changed dramatically. The CFI lending market, which was booming a year ago, in many ways, from the crypto native side, has been unfortunately somewhat gutted. DeFi lending remains something that is super interesting. I think one thing on that point, as a firm, we're really intrigued by some of these on-chain lending protocols that have made a lot of strides the last 6 months or so. But all that aside, I think from our firm's perspective, we're extremely conservative from a leverage and capital perspective. It's something that we use as one tool in our toolkit. But yes, in terms of sourcing more esoteric borrows, it's something that has changed pretty dramatically. We're conscious of both from a firm perspective, our cost of capital and where opportunities are, but also the operational side of things of if we are using different DeFi protocols for borrow, how stable are those borrow opportunities? So all of that said, given the state of CFI lending, it certainly has created different things to be thinking through as a trading firm. But I don't necessarily, that's not always negative in that, again, I think a theme, especially as we think forward of what's going to take crypto back to the next bull market, I think that things that are delivering value, like on-chain under collateralized borrow, are really interesting, not just for crypto participants, but perhaps those are the use cases that start making crypto interesting for the non-crypto world.
Very cool. So appreciate the color. I know we're up at time, so wanted to ask you before we let you go, any highlights from your trip to Denver? I know you spent a couple of days out there meeting with a bunch of projects. potential partners. So, and you've been in this space for a while. So any cool, good insights for those of us that were not in Denver that you would want to share?
Yeah, so it was a great week in Denver. Super well run conference, a lot of great projects, other counterparties from the space were there. And yeah, I left definitely with just kind of another jolt of energy. Not that I've lost my energy about crypto, but another jolt of energy that there are a lot of quality builders out there that are really working towards what I mentioned before of kind of extending crypto use cases beyond just servicing our own community or our own industry. And I think that's what's really exciting. That the pace of, again, quality builders in the space, at least from my observation on the non-technical side, perhaps hasn't slowed. And again, it's events like that that prevent us all, I think, from getting jaded and has me optimistic about where our industry is headed.
Yeah, absolutely. I mean, crypto foundations are built around communities, and so bringing people together like that, helps you kind of like avoid the headline risk and noise that is out there kind of circling around 24/7, and focus on the fundamentals and the people that are continuing to do great work. So glad to hear that you got another jolt of energy or dopamine rush from that event. I know that it was probably quite a lot of conversations and activities. So glad to hear that it was a successful trip. Well, thanks, John. I really appreciate it. Any closing thoughts that you want to share, or before we let you go?
No, appreciate it, Jim. Super excited about what you all are working on. And again, thanks for having me. And yeah, looking forward to catching up soon.
Yeah, absolutely. And, as you guys can probably tell, John is super approachable. So anybody that wants to reach out, has a project you're working on, I'm sure John would love to take a conversation. So thanks again, everybody, for tuning in. Really appreciate you joining us. You can listen and subscribe to Compound Thesis on YouTube, Apple, or Spotify, and find all of our episodes at youtube.com/@compoundlabs. If you enjoyed today's show, share it with a friend. Stay tuned for our next episode. We'll be back soon with another great edition of Compound Thesis.